State plans to police solar industry with tough rules. Economic rebound on track, says CBK boss. Kenya gets extension of sugar imports reprieve. Kenya left out as East Africa peers unveil integrated stock market. UK-Kenya trade pact awaits approval of ESC Council of Ministers. Welcome to Kepsa Media Watch. Every week, we will be sharing stories influencing the business environment in Kenya, Africa, and around the world. These are some of this week's biggest stories. The government plans to widen surveillance of the solar industry. The move has seen the state introduce new requirements for industry players, including technicians, manufacturers of equipment, and traders. This is even as the use of the cleaner source of electricity grows in Kenya and starts emerging as a key competitor to the traditional sources. The increase in the use of solar energy is seen in the growth and amount generated and fed into the national electricity grid, including from the state-owned Garissa solar plant. The Central Bank of Kenya Governor Patrick Njoroge, in his effort to dispel fears that the disruption by the virus was more adverse than anticipated, stated that Kenya's economic recovery from the COVID-19 pandemic is steady, driven by the manufacturing, tourism, and ICT sectors. He further said they had safeguarded the local currency against depreciation, despite reports that the shilling had dropped to 110 against the US dollar. Kepsa has granted Kenya a fresh 2-year extension of sugar import limits from the regional trade bloc to revamp its ailing industry. The arrangement limiting imports was due to expire at the end of next February. However, Kenya requested a 2-year extension, saying increased imports could smother its sugar business, which is not competitive and has several loss-making millers struggling to stay afloat. Kenya is struggling to improve output due to relatively high production costs and loss-making sugar factories, which produce 600,000 metric tons of sugar a year, below the annual consumption of 800,000 tons. The deficit is covered through strict import quotas from Kepsa. Kenya has been left out as her East Africa peers unveil integrated stock market. For stock market investors in Kenya, this means that they will continue to incur high cross-border brokerage costs as their regional counterparts trade seamlessly via the World Bank-backed automation project. The East African Council of Ministers held their last meeting of the year with Kenya, hoping to get approval to separately sign a trade agreement with the United Kingdom ahead of the December 31st deadline. The virtual meeting of the ESC Sectoral Council of the Ministers of Trade, Industry, Finance and Investment (SCTIFI) also discussed other regional matters such as ESC policies on trade, non-tariff barriers, customs, budgets, standards and quality, industrialization, and the tripartite agenda. Kenya is pegging its hopes on Article 37 of the ESC Customs Union Protocol, which allows partner states to separately conclude or amend trade agreements with foreign countries, provided the terms do not conflict with the provisions of the protocol. That's it for this week. For more on these and other stories, please head over to kepsa.or.ke.